Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. I've got exciting video for you today. I've been looking at the generally stock market the last few weeks, and one of the brothers actually mentioned just that can you have a look at the semiconductor companies, and I've done a bit of research prior to that, and I thought, you know what, this is a great time to share with you actually what I found out based on, because we've done videos before where we talked about some of the biggest companies in the tech and in the semiconductors, and we always found out a lot of them were very much overpriced. But because what's been happening in the last, say, month and a half, whatever, you can see there's so many companies in here, including Nvidia's and Broadcom or whatever. All of these companies have been hit really hard, so we need to look at them again and see if they are undervalued, and see maybe this might be a buying opportunity for us and maybe to add to our portfolios. So yeah, that's what I want to do. I want to share that with you today. I hope you're enjoying the videos. If you are, just give it a like, please. It takes a lot of time and research, to be honest with you, to put these videos together. And when you have a full-time job, and it's not easy to obviously have the time to put these things together. So I really would appreciate if you just like the videos, and because that means more people will obviously see the videos, and we can help a lot of other brothers and sisters that are in a very similar situation. There's this stigma going around, people, saying, oh, you can't invest in the stock market, it's not halal, whatever. But alhamdulillah, I think we're doing good so far, and the things that we're sharing so far and the questions that you're asking, that means we know what we're doing, and we understand this is a space that we can all invest in, inshallah, and we'll learn as we grow and see how it goes. But yeah, if you can give it a like, inshallah, that I would really appreciate that. Thank you very much. Let's get started and look at the first stock. So before I reveal the stocks, I just want to give you a quick what is going on here on the top here. So you got the ticker, you got the company name, the current price, a little bit profile of the business, where PE wise, where they are at the moment. PE basically tells us how overvalued, undervalued these stocks are. But because remember, the companies that we're looking at today are high growth is business, so they supposed to have, or they have a basically higher multiples, if you like. And then future growth, and then we're going to look at their future return on equity in the next basically 3 years. And then current ratio will tell us whether this business is actually has enough money to pay off their debt. Quarterly revenue growth, so this time I went for the quarterly revenue growth for these businesses, and then we're looking at if they have a competitive advantage, and then we look at Morningstar valuations for what they think, whether it's undervalued, overvalued, what is their target price, and then same goes for Simply Wall Street. I use those two companies. I have no affiliation. I actually have subscription for Morningstar, and I use it quite a lot. Okay, so basically that's it. Okay, I have no affiliation, so don't feel like I'm selling you anything. Okay, right. So the next thing, first company we're gonna look at, in fact, is Qualcomm. I own this company in my portfolio. Currently trading $179 per share. They basically have so many licenses. They have so many patents. So there are a lot of the technology they have. They basically nobody else can copy because they have patent, unless they've given actually sell. And sometimes they actually do sell their patent to other companies to copy and so on. On top of that, they are the biggest when it comes to 5G networking. I've owned this company for a long time. I wish I bought more when it was really undervalued, but right now, as you can see, it's obvious is coming back to that stage again. So it's currently 22 PE, future growth about almost 11%, and then future return on equity is about 46%. That is huge. Okay, but that's what you're paying for. That's what you're paying for the basically this higher PE, for example. Current ratio is above 1, so that means they've got enough money to pay off any debt they have, and they have released the earnings report just a couple of days ago. They actually bought back a lot of their shares. They spent over, but I think it was about over, I can't remember exactly the number, but they bought actually so much of their stocks back. They are paying dividend, and they're paying, basically they're paying debt as well, which is very, very good. Quarterly revenue growth of about 12%, and then they have they don't have a much of a competitive advantage. It's a narrow basically competitive advantage over the other companies. They are fairly valued at the moment. Morningstar thinks it should be $163 per share. Currently almost 80. but according to Simply Wall Street, they are about 14% undervalued, and the price should be 206. I agree with Simply Wall Street, because when I looked at their 5G rollout and what they're doing and the fact they have a patent, the growth in this business is going to be absolutely amazing. On top of that, you get about almost 2% dividend on top of that. So I think the price definitely should be above 100%. Okay, but Morningstar, obviously they're quite conservative when it comes to estimations, so I am happy with that. But at the same time, I wouldn't hesitate to add to what I have already in the next couple of weeks. Then we've got Nvidia. Now this is one of the businesses I absolutely love. I used to have a couple of shares before I started YouTube a long time ago. It went so much, I made quite a bit of money, and then I sold it at that time. Now look at it now. It looks like it's coming back down, because it's down quite a bit in the last few weeks, right? So obviously, again, we're looking at semiconductor companies. They do create their own chips, graphics and computer networking devices. PE 73, very, very high. But look at the future growth, 17%, and then future return on equity of over 40%. Current ratio over 7%, over 7. Okay, and then you've got quarterly revenue, basically growth of 50%. This is the reason why people are paying. So the future growth, the return on equity, the quarterly revenue growth, or the basically yearly revenue growth, that's basically why people are paying these high multiples, and this is the reason. And they have a wide mode, which is amazing, but right now, according to Morningstar, is still overvalued. They wanted the price to go down 194. And this is after I think they release their earnings next week or week after. So we'll see what happens. So initially, I may be tempted to actually get into this, because if you think about it, if it comes back to around this, right, I might be looking at this, because if you think about this, in 2 weeks time, they release their earnings. Every other company, including Qualcomm, that have amazing quarter, what happened as soon as they released their earnings report? It went down. Okay, so if it goes back down from 240 to probably about 190ish in the next 2-3 weeks, then I'll start definitely looking at this again. And then when it comes to Simply Wall Street, they're saying it's 3% undervalued. The price should be $247 per share. So again, Nvidia is one of the best companies out there. I don't think it's way overvalued anymore. I think it's coming back to nice territory. I would have liked to, maybe if it goes down a little bit more, okay, maybe another 5-10% down in the next few weeks, then I'm definitely going to look at this, because you look at the growth, look at quarterly growth, 50%. You're looking at 17% future growth as well, and they are in the right sector. Okay, really are in the future of tech. Right, the next one is AMD. Similar sort of a story. Okay, AMD, you know what it is. It's very similar to Intel. There is the new Intel, if you like. They're way better than Intel, 100%. Their PE is quite high, 15% growth in the next, in terms of future growth. And when you look at their future and return on equity, it's about 24%. Current ratio, they've got plenty of money to pay off that assets, to pay off their debt if they need to. And then return on quarterly revenue growth for 54%, which is even bigger than Nvidia. But when it comes to moat, they don't have any at the moment, but fairly valued stock apparently, according to Morningstar. They expected the price to be $128 per share, and guess what? It's $120 per share right now, and it's 17% undervalued according to Simply Wall Street, and $144 is what they expected. So they both agreed this company is undervalued at the moment. That's amazing. I have not seen AMD undervalued, and because they released their earnings in the future, basically what they've talked about, I haven't gone through the whole thing yet, but I've just seen their earnings report just very quickly, just the overview, basically the earnings and the revenue growth, and it's huge. And the fact that they're undervalued at the moment, that's very, very tempting. Very, very tempting. Okay, next one is the Micron. I've talked about Micron before. Again, they obviously make chips as well. Right now, PE is very, very low. But when you look at their PE, sometimes this is what you need to think about. PE doesn't tell you the whole story. So they have a low PE, okay? But look, they are overvalued according to Simply Wall Street and Morningstar thinks is fairly valued, but they have a PE less than 12, okay, less than 13, which is crazy. All these companies are trading high multiples, but at the same time they are undervalued. So this sometimes PE, don't just follow PE, because it can actually, you have to compare it with the industry. Okay, so according to basically simply Wall Street, the future growth is about 11%. When it comes to return on equity, about almost 19%, and then they have enough to pay off their debt. 33% in terms of the quarterly revenue growth, and then you've got and when it comes to moat, they have none at the moment. Fairly valued stock, target price of 90, currently trading about 81, and according to simply Wall Street is overvalued and should be about 80. It's about there at the moment, so it's kind of fairly valued, but 2% overvalued according to this. Final company that we're going to look at is one of my favorite in this sector, and that is Broadcom. Broadcom, I own it, I absolutely love it. I wish I bought more when I first started buying this company. PE of 38, 14% when it comes to almost 15% future growth. Return on equity almost 90%. Next 3 years, that's the expectation, 90% return on equity. They pay massive dividends, which is amazing. Current ratio over 1. Quarterly revenue growth of 15%. They don't have a competitive advantage, and at the moment, according to Morningstar, they basically trading about 19% premium, and then basically the price should be about 500, currently about 580, so not much really, and then 2% undervalued according to simply Wall Street, and $592 per share is basically what they're expecting. Now, I love this sector, you know that, right? And the Qualcomm, I used to own all of them apart from Micron. I've never owned that. I love Qualcomm. I love NVIDIA and AMD. AMD, I think I started buying it when it was about $40, $50 per share. It went all the way to 100 or something, and then I sold out. Maybe it was a good time, because to be honest, it hasn't gone up much from where I sold. I think it was 110, 115 or something like that when I sold about a year or something ago. So yeah, overall right now it looks like all of these amazing companies that have a massive growth, massive zone. Some of them obviously like companies like Nvidia, which I think at some point in the next 5 to 10 years will be $1 trillion business, right? Nvidia, I'm sure they will take out when it comes to Intel from in terms of being the leader in that market. Obviously I own Taiwan Semiconductor, and I prefer them, but even though they're not in the same kind of, Taiwan actually creates and manufactures the actual chips, whereas these guys, they only design it and they pass it on to Taiwan Semiconductor. So they are different businesses, but I think for now I'm not sure if I'm going to add to my portfolio, because it's going to add a lot of volatility into my overall. But like I said earlier, if this one comes back down to where I want, maybe the 190ish, I think I might start looking at it again and see how it goes. I hope you enjoyed the video. This was kind of quick overview. I thought I'll share with you guys because of what's been happening. If you just look at it this month, can you imagine 18% down? Okay, Nvidia is 18% down. Broadcom is about 13% down. If you look at Intel, it's 9% down. AMD 16% down. So Micron is about almost a 15% down. So almost every single company in the semiconductors is down. As well as that, they've also the companies that create the chip makers, the ones that actually have the what are they called, the equipment companies, they're also down as well. Okay, so Applied Material, for example, Lam Research is also down. KLA, for example, one of the companies that I own, is down about 13%. Teradyne has actually had a terrible quarter, is down on 30 something percent. So yeah, all of these companies are amazing, but at the same time, remember, they're very volatile. And this kind of climate, you really have to, if you're buying the Nvidias, you're just gonna have to keep buying it, holding on to it forever. Because if you buy it now and it goes down 10%, you can't just panic and start selling them, because these are the future of when it comes to this sector. Again, in the next couple of years, the sector might actually start being, basically the demand might become flat, and for that reason these stocks might start tanking. So you're gonna have to take a little bit of risk here and there. The reason I own Qualcomm is because they pay nice dividend. They're not as volatile as the rest of the companies. I love Broadcom. They pay amazing dividend. They're dividend growth company, so I like those two in that sector. Nvidia does pay some dividend as well, but if I'm gonna buy it, I'm gonna buy it the right price. But I'm not going to overpay, because anything can happen. You really have to be careful. And everything I'm saying here is not financial advice, as you know. It's just I'm sharing my thoughts and what I think about these companies. And the research that I've carried out comes from these websites. So for example, this is Broadcom. Okay, as you can see, they're saying it's about 2% down. So future growth, for example, and so on, they're talking about 14-15%, whatever. So this comes from the research I'm done, comes from these websites that I'm using. I'm not basically making this up or just coming up with our thin air. So everything comes from these two websites that I've actually used, as well as Yahoo Finance. I hope you enjoyed the video. Take care, everybody. Assalamu Alaikum.